Hey, this is DK Trader at StockLogic.com doing a video tutorial on Bollinger Bands. Bollinger Bands are a very commonly used indicator. It's put on the chart with the candlesticks. It has an upper band, a lower band, and the middle is the 20-day moving average. It is said that with Bollinger Bands, it never trades outside of the Bollinger Bands. This is kind of true and it's kind of false because although when you look at it, it is always in there. The Bollinger Bands form and are calculated based off of the current price action. So say that the price goes below the Bollinger Band, all of a sudden the Bollinger Band will move in that direction. But another thing that you could argue is that, see right here where the slope of the Bollinger Band was not steep enough to accommodate for this, there you could see that it was trading way outside of the Bollinger Band. There's no way that that calculation could be there. So that was an extremely good, that was actually when the market crashed back in May. And that was an extremely good time to buy. And you could easily tell because of the Bollinger Bands. Another main feature that I look for in runs is using that 20-day moving average of the Bollinger Band. Well, it's not of the Bollinger Band, but anyways, using that to tell which phase you're in. As you can see, when you're in a bullish phase, it uses the 20-day moving average as support. When it crosses below, it uses it as resistance. When you're in an undefined period of bullish or bearish and it's just oscillating, typically you'll see movements from the bottom band to the upper band back to the bottom band. Here is when support was used again. Then we have resistance. And another quick thing is that usually you will see spinning tops or an indecision period on that 20-day moving average or 20 whatever interval you're in. I have them on my chart. They're extremely useful. Other things you can see is that when they squeeze together, that typically means that a price movement is about to occur. And as soon as it opens up in both directions. So areas where the Bollinger Bands are extremely wide, and there's actually an indicator for Bollinger Band width, that indicates that a big movement is occurring. When there'll be a point where either at the top or the bottom, where especially you can tell if you have moving averages on, that it will start to curve away from the Bollinger Band and the bands will start to tighten again. As you can see here, nothing has really gotten that tight, so this isn't a good example for where this happens, but when it does tighten up, you can see that a breakout is about to occur. And if it breaks the top Bollinger Band, you go long. If you break the bottom Bollinger Band, you go short. Anyways, thanks for listening to the tutorial. Hope you found it helpful. Go over to stocklogic.com. I'm DK Trader there, and happy trading.